All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market just chopping along. It continues to kind of be this slog here. We're close to, some of the highs that we're seeing earlier this week. But, this S&P 3000, we came down and hit it yesterday. Bouncing off that a little bit here this morning with some of the strength in tech and some of the strength in consumer staples. There's some real strong action in some of the staple stocks. Some of the recent winners, are pulling on back, and some of them pulling back pretty substantially. But it's the same type of market out there. And I know at the last video yesterday, I mentioned that yesterday was not a game-changing day. It was not a significant type of day, here for the market. And, like always, I do get some pushback there for it. But yes, if you're a day trader, sure, every hour of every day has some significance. But when you're looking at the market as a whole and you're looking at it and how it kind of evolves and moves, and when are the next trends, or what is the trend, there's no real change, right? It's not something where we're seeing a lot of change in that element. And, some of that's been highlighted by just some of the lack of trade signals that we have seen here of late, and just some of the lack of follow through to trade signals that we have seen of late. And when the market's kind of just sitting, in a very tight, very small range, we're not going to see a ton. And, when we do, the follow throughs aren't going to be as fantastic as, what they will be when the market is trending. We do have the dollar pushing on up here again this morning, and we have the VIX pulling on back. We have bonds slightly higher, but everything just kind of a mix. Just this kind of mixed bag element here, and the market trying to digest earnings. Right? We have earnings last night out of Starbucks, very strong. Very strong report here for Starbucks. I had a chance to go through it. It's a fantastic report, and we do see analysts upgrading it this morning, and for good reason. We saw Google, which is very interesting. The price action significantly higher here on Google, but we have President Trump tweeting about Google here this morning, so we'll be interested to see how that plays out. But Amazon on the watch list, pulling on back after their earnings here, just slightly. It's nothing, really that big here for it. Intel, which, you can see the earnings reaction, boom, big pop up, right? And then it was like every analyst came out down, just no, we don't like no, Intel, it's not clear. It's, Intel earnings aren't great, blah, blah, blah. And, we see Intel coming all the way back down and giving up their post-earnings gains. Now for the challenge, we have Bank of America, which is sitting at 162, and we have Target, which is sitting at 155. So let's go fill these in. See what we have to do here. 155 and 162. Not real pretty on Target at all. In fact, if we were to close this right now, this would be our biggest loss for the challenge here so far. It'd be about a 33% loss, 30% loss on the trade if we exit it right now. The stop level is 86.73. For Target. That's the stop price level. The current price is 86.97. So I'll be staying in. But we do bump into the auto exit date here this afternoon. So unless Target turns around and goes up about $1.50 this afternoon, we'll probably look to exit or need to exit that here this afternoon. And then Bank of America, we're not running into time stops. We're not running into, the stock exit level here. 30.22 is the exit level, and I believe 30.42, 30.45, So yeah, 30.45 is the current price of the stock. So if it does pull back a little bit into the close, we will be hitting the stop exit with it as well. We've managed to put in a few gains here this week, but yesterday, today, kind of giving up the majority of them as we continue to just kind of chop and slug around here, in the market, and with a lot of these trades, we're not seeing the average true ranges getting hit in any material way. Now, I was asked yesterday if I would make a change to the challenge algorithm because we're not hitting, two average true ranges all the time, and I kind of looked at it, okay, no. I'm not going to make a change to the algorithm, right? It's something, I'm not going to adjust it. I'm not going to change it. This is something where, when we start the challenge, right, we know from the data set, we know the probabilities. We know what the tendencies are. We know there will be some, and the answer is absolutely, right? If I go tweaking it to try to, adjust it for some of the chop, what's going to happen is it's not going to survive the chop as well, and it's not going to be ready for when it shifts into trend, right? So it's just one of those where, no, I understand what it is. I understand kind of how it's going to play out. And, there will be months during the year that are like this where, we just, here with those, but, I do understand some of the frustration. I want just as much as you to see some trend action coming in, and come on, let's go. Let's start seeing some of these pop again, like we had with Under Armour and gold, and Visa and Boeing, and some of those early trades here in the challenge. But the answer, as far as am I going to change anything to adapt to a chop market, the answer is absolutely not. It's just not something that makes any sense in any way, shape, or form. Because you can say, well, all right, we'll change it, we'll adapt to it, right? But then what happens, right? Well, with Bank of America, we end up taking it when when we have a 20% gain. It just doesn't make any sense unless you have a crystal ball and know exactly where the chops and pivots are going to be. Then of course it makes sense. But you won't see me. And going back and analyzing a lot of the data for the next challenge, changing a quarter of an average true range move. And, I still am analyzing it, kind of looking at the data, seeing, okay, where does all that come into play? But, we'll see. It's not a massive major change, and it's not one that's going to make or break a challenge or anything like that. But when it comes to the challenges going forward, right? When it comes to everything that's going on, one of the things that, I talked about before this challenge started is I expect most challenges to be able to put in $10,000 to $20,000 in gains. That's my expectation for the majority of the challenges. I expect it to have a chance for the 100K, but that's not going to happen every challenge, right? I still think it could happen this challenge, but we are a little bit behind that pace. But most challenges, somewhere between that 10 and 20K area, we'll have a few challenges that go to zero, but not very many, with this system. And, that's what I'm looking for. So we'll continue to we'll continue to operate and run it as as you have seen, and as things as things play out and as things need to get tweaked, sure, we'll tweak them, but won't make major overhauls or anything like that. The data for it is just, it's just been too strong. And I understand the market changes, and some things may need to shift a little bit, here with it. But one of the keys and one of the things that really kind of makes this work is the average true range and basing things off the average true range. And this is something that wouldn't work 10 years ago. It's not something that would work 10 years ago. And you can go back and you can look at, how things traded and how things moved. And what does it tell me? It tells me that algorithms are more and more using this average true range element or some sort of concept of it, to drive decision making. And so having it in here has really kind of helped the effectiveness of running with a trade. Because let's face it, trade entries are easy, trade exits, well, that's where all the ambiguity comes in. That's where all the hindsight and second guessing and all that kind of stuff starts to come in, and could be needless to say, could be a little bit maddening there. Okay. All right. As far as new signals here this morning, there are no new signals on the board. One of the things that's let's see if I can pull it up here. One of the things that kind of caught me chuckling a little bit this morning. We take a look at some of the stuff, right? You take a look at here's Honeywell. It has a downside 3-7 crossover, but it had a downside 3-7 crossover yesterday and then rallied into the close and didn't have it. But it's not a signal here. Stocks like Valero, same type of thing, rallied into the close yesterday, but didn't signal. We've seen, if we come in, let me click just view all, see if it'll bring up the entire watch list here. But yeah, things like Alcoa, which, popped 3-7 upside yesterday, 3-7 downside today, rallying, right? Just absolute consolidation within so many of these things. Apple, just absolute consolidation. Amazon, yep, the earnings drove it. But that's not a big move for Amazon on earnings, not a big move at all. You take a look at Boeing, it is continuing to get beat up, and I think you can say rightfully so. And as I watch it, I go, okay, keep dropping, keep on dropping, and maybe base out around this 335, and we might have an opportunity to play it on the upside on the next crossover. But who was it I wanted to show? And I'm sorry, it slipped my mind, so I'm going through it real quick here. Was it Chipotle? Here's Chevron. Yesterday trying to break out into a new high. Boom, boom. Just taking it on the chin very, very quickly. But no bullish signal set there with it on the break to new high. No bearish signal on the downside. Disney had a 3-7 crossover, come into play, but did not trigger here. Bullish, so consolidation risk was just too high on it. I really kind of wanted to play it, but consolidation risk just was not to the point where I could for the challenge. And let's see, maybe it was Whirlpool. And Intel just keeps on dropping since their earnings here. It was Vulcan. It was Vulcan Materials. Let's come down here to it. Yesterday, big, bad, bearish engulfing, downside 3-7 crossover, right? The day prior, we had an upside 3-7 crossover, and now today, back up. Just so many things caught in this type of chop, that kind of wash. Here's Verizon, chop on down, chop back up. Ultimately, really not materializing in any kind of trend. Whirlpool, same type of thing. And that kind of stuff is just all over the place out there in the market right now. And, no signs that it's going away, right? No signs that it's, going to shift. And so, we'll continue to wait for, new signals to come in, and we'll look to trade those. We have plenty of cash to go out and to trade them, take advantage of them. We'll probably free up a little bit more cash going into the weekend, as barring something absolutely game-changing from Target, we will have to exit there. It'd be nice to see Target rally 80 cents into the close and be able to take it off at a little better price, but either way we'll be hitting one of our stops here by the close. And so it'd be nice to see another signal come in, but we'll react if that does happen. Okay. Last thing I want to comment on is Larry Kudlow speaking on CNBC this morning. Larry Kudlow, economic advisor to President Trump. And Kudlow basically throwing cold water on the hope that maybe talks with China will, end in a deal. And basically saying that, hey, talks with China are to restart negotiations, right? So it's one of those where It's just going to be a continued long process, not going anywhere. It's something the market's going to have to deal with for a long period of time, and something that there's not a hey, I'm going to wake up and there's a magic bullet and it's fixed type of thing. And right now, market has a lot of those stories, and it's one of the big reasons why we're seeing a lot of the chop that we are seeing here in equities. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.